Today I'm going to talk about the undervalued precious metal and inflation hedge that almost no one's talking about. So let's talk platinum. Hello everyone, my name is Cody Koch. Welcome to the channel where I talk about advanced trading, investing, and business concepts. So I wanted to share this with everybody. I've known about this for a few years. I figured some of you might actually find this very interesting. You might want to implement this into your own portfolios, totally up to you. As always, make sure you use intelligent exits and position sizing, and because who knows what can happen with anything. So platinum is currently, as of this recording, selling about half the price of gold. And it's also, as of this recording, selling for less than the cost of mining it, or essentially less than the cost of production. This is a very unusual scenario. It doesn't happen like this for very often, and it usually doesn't last very often, and I'll explain that all today. So platinum has long been known as the rich man's gold. For good reason. It's about 30 times rarer than gold. Platinum jewelry is usually considered more valuable than gold jewelry. A platinum credit card is considered more valuable than a gold credit card. A music album going platinum is considered more valuable, or it sells more, than a music album that's gone gold, for example. It's also an interesting side fact that platinum, along with all the other precious metals, in fact, I guess all elements heavier than the iron on the periodic table, apparently were formed in giant stars, far larger than the sun, many billions of years ago. In particular, precious metals are believed to form during supernova of these giant stars. Also, they believe they form when two neutron stars merge or during the birth of a black hole. What that means is all these amazing precious metals that we find on our planet actually formed in giant stars billions of years ago that blew up and scattered that material, these precious metals, into space. And at some amazing form over the last 4, 5, 6 billion years, they coalesced and created Earth. At least that's the belief of our current scientists. All of that is crazy cool and really interesting. I want to share that with you. Okay, so let's get started. So first I'm going to talk about the supply side and the cost side of platinum. Currently, as of this recording, the average cost of production for platinum across the industry is averaging somewhere between $900 per ounce and $1,100 per ounce. The largest platinum miner, Anglo American Platinum, which is located in South Africa, its average cost of mining is around $900 an ounce, and it's considered one of the most efficient producers and miners of platinum in the world. The reason the cost of production is so important to us is in the last couple of months alone, platinum prices have been anywhere from as low as $830 an ounce to as much as $970 an ounce, and it's kind of whipping around. As of this recording, it's approximately $900 an ounce. So this means the vast majority of the mining companies in the world, virtually all of them, are at best breaking even as of this recording, or they're losing their shirt. One of the two. And in either case, that definitely means that mining investment and mining production is declining. Obviously, if a mine's losing money on something, they're not going to mine as much of it, and they're definitely not going to keep up investment in finding new mines. They're not even going to keep up investment in the mine that they currently already having producing. So what this means is you currently at this moment have an opportunity to buy platinum for less than the mining companies can mine it for. Now that said, I do want to say this and point this out. Just because the price is low now doesn't necessarily mean it won't go lower. There's a fairly good chance it won't go much lower, but it might go lower. For example, during the upheavals in 2020 due to COVID, platinum actually collapsed for a few days down to about $565 an ounce, I believe. So it's perfectly possible platinum could go down and stay down for quite some time. There's something kind of unique about the mining world where prices can actually stay below the cost of production and mining companies will continue to mine it. And the reason they do that is in many cases, it can be substantially more expensive to close down a mine than to actually continue mining something, in this case platinum, and selling it for a loss. Plus, there's always the possibility that platinum prices could go through the roof, and that, of course, would save the mine, and the mine would become profitable again. However, inevitably, as these prices stay down, even if mining companies are continuing to mining and deliberately losing money because it's better than their alternative of shutting down that mine, inevitably it's going to happen that these lower prices will eventually lead to substantially less investment in these mines. Not only are they losing money, but it also means they're going to substantially invest less in their mining operations. And eventually this will lead to closures and, of course, a reduction in supply. And in fact, this has been found. So in fact, these lower prices over the last few years have in fact caused a significant reduction in investment in platinum mines. You can actually see this in research out of South Africa. South Africa produces about 70% of all platinum around the world. A little bit is produced in Russia, and the rest is produced in North and South America. 90% of all known platinum reserves are actually located in South Africa. So very, very focused around one country in the world. This is very unique in terms of this situation. And that's because platinum is literally that rare. Now, on the other side of the supply, it takes on average about 10 years for a new mine to come on board, and it surprises a lot of people. Of course, it's difficult to find a new deposit of platinum, especially since it's so rare. But then you also have to get a lot of permits. You have to build a lot of systems in place, buy equipment, buy the land around it. All kinds of things are involved in order to open a mine, and on average, it takes about 10 years to open a new mine. So that means as the supply of platinum is reduced, it will take at least 10 years to bring this kind of supply back online. What's interesting about South Africa is that the South African rand, their currency, has actually been declining significantly over the last few years. It's lost a little over half of its value relative to the US dollar. As the currency has fallen, it's actually reduced the cost of mining. And the reason it does that is, unfortunately, because the currency is falling apart, that means the employees and the suppliers that work for these mines are actually making substantially less income. It essentially means in terms of US dollars, the cost of mining has declined. So what's amazing to me is despite this cost of mining staying down or declining, it's still costing somewhere between an estimated $900 and $1,100 an ounce to mine it. Of course, this rand situation is temporary. I'm not sure when it will stop, but at some point, South African rand will start to stabilize a little bit and the true costs of mining will start to be seen again. And of course, any major events in South Africa, any kind of political upheaval, any kind of situation with that causes shortages in platinum. So everything I just described is the reason there's been significant underinvestment in platinum mines over the last 10 years, and it will take quite a while to build these mines and bring them back on board. So I think that we're going into a situation where platinum will likely stay undersupplied for some time in the future, and possibly, because the price is so low, it's a great opportunity to acquire it going forward. As for the demand side of platinum is used very heavily, obviously, in jewelry, but a lot of people don't know that platinum is heavily used as an industrial metal in a lot of situations, such as used very heavily in automobiles, it's used in electronics, it's used in chemical processing. In particular, right now, as of this recording, it's used mostly in jewelry and in automobiles. Platinum is particularly important for catalytic converters in vehicles to lower pollution. So it's actually a very powerful pollution detoxifier used in vehicles. But it's also been seen to be, it's of course used in hybrid vehicles, and it's been used in hydrogen fuel cell vehicles. Now, because platinum is so low in price currently, around $900 an ounce, it is starting to be used as a substitute for both gold and palladium. Palladium is used very heavily in catalytic converters and other type of industrial uses. Gold, of course, is used in jewelry, but also gold is used in a lot of electronics and other situations. But because platinum is actually the least reactive metal, it has an enormous advantage in certain areas and certain aspects. It's also a fantastic electricity conductor. So platinum can actually replace gold in electronics, and it can replace palladium for catalytic converters. So there's currently a lot of people trying to work on technology that will replace palladium or gold for platinum. And the reason they're doing so, of course, is because platinum prices are so much cheaper than gold and palladium. So I want to show you the history of platinum prices, a little bit more detail, kind of give you a better idea of where they've been. This is a monthly chart, and you can see that platinum way back in March of 2008 was selling for about $2,300 an ounce as an all-time high. It then rapidly, in a few months later, dipped down to about $761 an ounce back in October of 2008 during the collapse. Platinum does have a tendency to be a little volatile, so be careful with it. And you see it rise back up to around $1,900 an ounce, and over the time it's declined all the way down to that $565 level I mentioned right here, way down here, and this came in, and it looks like March of 2020, during, of course, the collapse due to COVID. So here's the price of gold. Currently, as of this recording, it's around $1,758 per ounce. It's been approximately $1,800 an ounce for some time. It got over $2,000 an ounce just a few months ago. This is palladium prices currently. They're approximately $2,200 an ounce, and at one point it was up to $3,400 an ounce a few months ago. Now I wanted to show you this chart. This is actually pretty interesting to me. This is the comparison of platinum to gold prices. Now they have it set as a percentage, so 100% would mean the gold price and the platinum price were exactly the same price as of that period in history. Now this goes back to 1880, so we're talking 130 something years ago, and you can see that way back in 1880 the price of platinum was for a while notably less than the price of gold. Right about where my hand, this little hand figure is, the very tip of it, you can see that that would be about the 50% mark. So that is about 0.5. That means that platinum is about half the price of gold in this period. In this case, a little over 20 years later, platinum got to selling about 5.75 times more than gold. A little bit of a crash back down, then back up to 5.75, give or take a little bit. And then it came all the way back down to 1. This gives you an example of how volatile platinum can be. And part of the reason it does that is not only is this a supply issue, because platinum is so rare and hard to find, but it also demand issues can really swing it. In the case of platinum today, you're going going to see platinum is heavily affected by the automobile industry. Whenever automobiles sell really well, platinum prices have a tendency to rise quite dramatically. So I want to point this out. And the reason I want to point this out is this chart ended around 2017. Platinum is around half the price of gold. So actually just to the little tip of this finger, middle finger, I guess, in the case of this little hand I'm using, that's where platinum would be as of this recording. So we're talking the cheapest it's been in approximately 120 years, which is pretty unusual. So the question is, of course, and this is where people have to be careful with the risk reward and whether or not they're comfortable with this kind of stuff, is where's platinum going from here? So you might be wondering why I'm showing you the platinum and gold ratio. Just to be clear, this is not necessarily predictive of anything. Platinum and gold are completely different commodities, of course, but they are substitutes for each other. And you will find when platinum prices have a tendency to go through the roof, this will also drive up gold prices with them and vice versa. And the reason they have a tendency to do that is because people will convert from one to the other based upon what is giving them the best deal at that time. Right now, platinum has a decent number of what I call demand channels. Obviously, demand channel for jewelry, demand channel for automobiles, electronics, medicine, and magnets. It's actually used in a lot of cancer medications. People don't know that. It's also used in pacemakers. Platinum is very important for all the above. As platinum stays down in price like it currently is, stays down here where it's substantially cheaper than other alternatives like gold or palladium, you will find that humans naturally do this. We will start to discover new uses for it, and new demand channels are in the process of forming. I already discussed a few where platinum is starting to replace palladium and gold for certain uses. That is part of the process of humans discovering new demand channels. Now, obviously, way back in here in 1920, we didn't really, from what I understand, we really didn't have catalytic converters back then. We did have jewelry. Of course, we were using it for jewelry, but we didn't have electronics. And we didn't have it for some of the medications we use. So the uses of platinum back here and what was causing platinum to have such demand back then was not the same stuff that is the reason we're demanding it so much today. And that's the interesting thing to kind of point out when you're doing a supply and demand analysis of things, especially of a commodity like platinum, is the supply side is usually far more important than the demand side. And the reason it is, humans have a tendency to develop new demand. We have a tendency to figure out new uses for something and new demand channels form. So let's talk about potential demand in the future, growing demand in the future. Pollution standards around the world are significantly growing. People don't like smog. It's obviously not good for people. Research has shown plenty of this. There's a lot of issues with it. Platinum protects people from this. And as these standards get stricter and stricter, as they have recently, you will notice the amount of platinum used in gasoline cars and diesel vehicles, especially diesel vehicles, will substantially increase. You'll also find that hybrid vehicles use platinum to roughly the same amounts as current pure gasoline and diesel powered vehicles. If hydrogen fuel cell vehicles ever take off, that will be a significant demand increase because a large amount of platinum is used in hydrogen fuel cells in order to properly produce the electricity needed to get the engine to run. It's also, of course, used in a lot of electronics, which is one reason it's being used as a substitute for gold. Gold is heavily used in electronics because it conducts electricity so well. Platinum does also. And so you're going to find that platinum may very well replace gold in a number of electronics in the near future simply because its price is so low. New channels of demand have formed. Old channels of demand have become obsolete and disappeared. So it's very likely new and better uses for platinum will be continually developed over the next 10 or 20 years. So you kind of combine it with a notable decrease in platinum mining and platinum mining investments, and it's predicted over the next 20 years to have a significant decline in the amount of platinum mined simply because these mines haven't kept up production, and they haven't kept up production simply because the price is too low, naturally. Also, with the demand and all the alternatives that platinum can be used for, it's very likely that the platinum demand will hold up or actually increase in the coming decades. So in my opinion, there are a lot of reasons platinum should go up in price and not very many reasons platinum should go down in price. Okay, so for those of you who are actually interested in investing this, you can of course purchase platinum futures if you're wanting to trade them. You can buy physical platinum in the form of coins or physical bars. By the way, if you do buy coins of platinum, there are some well-known minted coins that you will be quite recognized. Coins have a tendency to sell at a premium over the metal's value. Not just a tendency, they almost always sell at a premium. And the reason they do is whatever price currently, I think coins where platinum prices are at $900 something an ounce, you will find platinum coins may be at $1,000, $1,100 an ounce, and that premium will hold. So if platinum ever goes to, let's say, $10,000 an ounce, you will see a premium over and above that for those coins. A coin may sell for $11,000 or $12,000 or something like that. It will be a premium over the metal's value. So just to let you know, that is one aspect of coins. Coins have an extra advantage is that you could, in theory, use them as money. People will demand them and use them in a pinch and tough situation, so that might not be valuable. Other ways you can trade it, if you're outside the United States, you're allowed to trade contract for differences, also called CFDs. You're allowed to use those. There are also vaulting companies that you can buy platinum and store platinum in their vaults. That's up to you if you want to take that. Some people don't trust that as much. It's just totally up to you and how you want to handle that. In addition, you can also get involved with platinum with ETFs, exchange traded funds, or ETNs, exchange traded notes. And then of course there are other methods. I do want to point out, if you do buy physical platinum, try to buy it from a region that does not charge sales taxes on this. You, in many cases, can go find some place to acquire this without having to pay those sales taxes. That will substantially lower your costs. Now here's the little bit of a fun part of the video. How high can platinum go? What's the potential upside? Well, let's go to our platinum gold ratio chart here. And obviously in theory could sell as high as 5.75 times. Now I'm not predicting this. I have no idea if history is any gauge what can possibly happen in the future. Maybe it can do this. Again, platinum and gold are not necessarily linked, but they are a little bit through their substitution. So who knows what might happen. But if it did, 5.75 times would put it around $10,000, $11,000 an ounce currently for platinum. If gold stayed at roughly $1,800 an ounce, that's approximately where platinum could go in the best case scenario. But granted, we're talking, that's the highest prices ever in the last 120 years, so not likely to get there anytime soon. What I could say with relative confidence, and you can see it on this chart, is that platinum is at least likely to go back to on par price with gold. Historically speaking, I think if you average this all over time, platinum has a tendency to sell around 50% more than gold to 50. I think it's anywhere from 150% the price of gold to 200% the price of gold on this chart. So 1.5 to 2 times the price of gold. And so that would tell us that platinum could probably comfortably sell for anywhere from $2,700 an ounce to maybe $4,000 an ounce, give or take a little bit in that range. So I would say that would be a comfortable kind of target range. It's up to you though. Just kind of give you an idea of what your risk reward. I don't think the downside's worse than maybe $565 an ounce, a worst case scenario. And again, we only saw that during COVID and it just crashed down there just for a little short period. So that's what kind of gives you the idea what's possible with this. Best case scenario, I don't see it going for much more than $10,000 or $11,000 an ounce if gold stays at $1,800 an ounce. Now, if the US dollar completely falls apart and begins to collapse, which is perfectly possible, it does happen, happens all the time, all over the world, then who knows what platinum can sell for. It could sell for hundreds of thousands of dollars an ounce if the US dollar collapses enough. That's up to your personal philosophies and theories, but I just wanted to point out that platinum doesn't seem to have much of a downside. It's already selling below its cost of production, so even mining companies can't make any money with it at this point. All right, so let's summarize the case. Platinum is selling below its cost of production, which means you can buy platinum for less than mining companies can mine it for. It also means that mining companies are losing money on platinum. That means they're not going to keep up investment in their mines. They're not going to keep up supply in the future, and it takes about 10 years to bring new supply on board. So the supply side of platinum is looking pretty bullish, so to speak. As for the demand side of platinum, platinum is used not only in jewelry, but it's also used in a lot of industrial uses. It's also excellent for being a substitute for gold and palladium, both of which are selling for over twice as much as platinum currently. So the demand side looks pretty good. Also, in addition, platinum is got a potential of a lot of new demand channels that are forming with new technologies that are being developed. So the demand side of platinum is growing as well. So I think the demand side is also showing a lot of bullishness. Now let's talk about the risk side of things. The risk of platinum, of course, is that the mining companies continue to mine it and lose money with it for a number of years in the future. Perfectly possible, happens all the time in history, but that will not continue for very long. Of course, another possible risk is somebody discovers a giant amount of platinum somewhere in some mining, and that substantially lowers the cost of mining it, so therefore the price of platinum falls. I highly doubt that will happen, considering how rare it is, but it is a possibility. I think the risks are pretty limited. In fact, if platinum continues to fall in price, it will just assure the supply will continue to shrink, which will inevitably lead to the fact that platinum is going to have to go substantially higher in price in order for it to become supplied again. And because it has so many uses, it's going to almost assuredly be something that humans are going to demand for the next couple thousand years. Okay, everybody, that's it for today. If this video was helpful, please like and subscribe. I appreciate everybody for watching. If you do have a question, please leave a question in the comments section. I'll try to answer it in a future video. Thank you for watching.